All right, let's dive into the latest financial report from NYK Line. Now, this company is one of the true giants of global shipping, and their Q1 results really give us a fascinating look under the hood of the entire world trade machine. So, let's get right to it. So you've got to wonder, right? In a world with shifting tariffs, demand that's all over the place, and a strengthening yen, how does a massive company like NYK even begin to stay the course? Well, the answer is in the numbers. And believe me, they tell a really interesting story. Okay, so let's start at the top line, revenue. Year over year for the first quarter, it's down almost 8%. That's a pretty significant dip, but honestly, it's just the beginning of the story. Because when we look at operating profit, whoa, the number gets way more dramatic. We're talking a drop of over 42%. This tells you that not only is less money coming in the door, but the actual cost of doing business is seriously squeezing their margins. And then, the bottom line, net income. Down by more than half compared to the exact same time last year. I mean, these are some seriously stark numbers. So the real question becomes, what on earth is driving all this? To really understand these huge drops, we need a little bit of context. The entire shipping industry just came off a period of absolutely historic, record-shattering profits. So while these figures look like a major nosedive, for a lot of people in the industry, it feels more like a return to normal, a return to earth, if you will. And here are the raw numbers behind all those percentages. A drop of over 50 billion yen in revenue and almost 60 billion in net income just in 3 months. You can really see the massive scale we're talking about here, and it just goes to show how incredibly profitable that previous year really was. So where did this change actually come from? NYK isn't just one single business. It's this huge machine with a ton of different moving parts. To find the answer, we have to break it down and look at how each of its 7 core business segments performed. And here it is, the whole machine on one slide. Just glance over at that profit change column. It is a sea of red. The container shipping business, which they call liner trade, saw profits absolutely plummet by 40 billion yen. But did you notice that one little green shoot? The energy business. It was the only segment to actually grow its profit. Let's zoom in on that contrast. You know, this slide really tells the story of the whole quarter. On one side, you have the energy division, think massive ships carrying liquefied natural gas, which did great, thanks to stable long-term contracts. And then on the other side, you have the dry bulk division, which ships stuff like iron ore and grain. It got hit hard by falling market rates, swinging it from a really healthy profit all the way into a loss. Of course, a company like NYK doesn't operate in a vacuum, right? Its performance is a direct reflection of what's happening in the global economy. So let's zoom out a bit and look at the major outside forces that shaped these results. The company's report actually calls out 4 key headwinds. First, a stronger yen, which basically means every dollar they earn overseas is worth less when they bring it back home. Second, the ongoing tariff stuff between the US and China. The report says this caused shipping demand to first crater and then spike, which creates just huge volatility. And of course, you've got inflation and fuel prices, which are always major factors on the cost side of things. And this slide right here, it makes that whole currency problem crystal clear. Last year, $1 US got you 155 yen. This year, it only gets you 145. Now that might not sound like a huge deal, but when your revenues are in the hundreds of billions, a shift like that can wipe out billions of yen in profit all by itself. So faced with all these headwinds and shifting markets, NYK isn't just sitting still. Not at all. They're actively reshaping their entire business, making some very big, very strategic moves to get ready for the future. First up is a pretty major move out. NYK has decided to sell its air cargo subsidiary, Nippon Cargo Airlines, transferring all of its shares over to ANA Holdings. This looks like a really strategic exit from a business that costs a ton of money to run. And while they're stepping out of air cargo, they are stepping into something new and pretty different. NYK announced a huge acquisition in Europe, a company called Movianto International, which specializes in high-value logistics for the healthcare industry. And listen, this is no small bet.
The price tag for Movianto is €1.25 billion. This is a powerful signal that NYK sees its future growth in specialized, high-margin logistics, and they're moving away from some of those more volatile sectors.
Okay, so we've seen the challenging results, and we've seen the bold new strategy. But what does any of this mean if you're an investor? How is the company treating its shareholders through this big transition?
Now, this is where it gets really interesting. You think, right, with profits down over 50%, a company would probably pull back on giving money back to shareholders. Well, NYK is doing the exact opposite. Get this, they've announced a massive share buyback program. They're planning to buy back up to 150 billion yen worth of their own stock by April 2026. This is a huge sign of confidence from management in the company's long-term value.
And on top of those buybacks, they're projecting a very healthy annual dividend of 235 yen per share. So the takeaway here is really clear. Even in a tough quarter, the company is signaling that getting cash directly back to investors is an absolute top priority.
So we're left with this picture, a legacy shipping giant facing some major market headwinds, but it's responding with a really clear strategic pivot and a powerful commitment to its shareholders. The big question now is whether these moves are going to be enough to navigate the choppy waters of global trade and set a course for smoother sailing.